Hi guys, welcome to today's update. In this update, I'll be talking about gold and silver. You guys, if you guys are looking to long or short gold, I'll be sharing out my personal bias and my personal perspective on both of the pairs. And I hope that you guys find this video useful. I am currently sitting on a weekly chart of gold, and if I go onto the full screen, and if you guys see, we are currently on a weekly supply, and we have got rejected from the same area as well. However, we were not able to take more liquidity from the same place where gold had took liquidity earlier. But if you guys see, this was my short idea. However, I did not initiate that up till here. However, this shot did play out and it did take the same area of liquidity from the drawn of liquidity drawn, and it kept on falling from there. I basically believe that we might go on to a consolidation phase where we might just be trading from a range to range. Why? Because if you guys look at the current catalyst inside the market, the war news has started to calm down a little. We have the CPI in the next 15 minutes, which is gonna be crucial from a directional bias on the either side of gold. It might just keep shooting up if the CPI comes negative for USD, and if it comes positive for USD, then you might just see gold falling down and continuing the bearish trend, which it is currently in. If I would personally prefer to long or short gold now from an institutional perspective or from a demand or a supply area perspective, this is currently not the zone where you guys can think about swing longs or swing shorts. However, if you guys are looking to short or just to do it from a scalp perspective, you guys can hop onto a 4-hour chart and try to understand what exactly the trend is. If you guys see, the current trend has not seen any break of structure from the previous structure which it was currently falling from. And at the same time, if you guys see the structure getting broken out, I think initiating longs would be a little risky too until the directional or the directional bias of gold gets quite clear. You guys see that even when gold was falling, it was inducing a little, and this inducement was quite big. And this was nothing but just a stop loss hunt. So if you guys are planning to short gold, just wait for this area again, or just wait for the upper levels which I have drawn and shown in the chart, which ranges from somewhere around 2060 to 2100 from a weekly short perspective. And from a daily short perspective, you guys can still consider 1996 to 2014 with a small buffer or with a good cushion if you guys are looking for shorts. And at the same time, if you guys are willing to long gold from a scalp perspective, I would just highly recommend that you guys wait for the 1800 zones. And the 1800 zone, for the first 1800 zone would be 1775 to 1804, and the second zone would be 1850 to somewhere around 1885. If you guys do not see the price coming in here or tapping in or mitigating it, do not initiate longs. And at the same time, it's not all about the price tapping in here on the price mitigating these areas. At the same time, you guys even need to keep this in mind that the reaction should be solid. If I don't even want to talk about institutions stepping in or not. If you guys see that the momentum is changing from a bearish to a bullish trend or from a bullish to a bearish trend, all you guys need to keep in mind is whenever you see a good large impulsive move either side, a bearish side or on the bullish side, you guys understand that now the trend might reverse, and for a confirmation we just wait for more consolidation or for more basing. So if you guys see somewhere or something like this, that gold starts to fall and then it starts to consolidate like this, then this zone is fine to long. Or else if you guys just see this falling down and you guys initiate longs, and the moment this gets pierced out, you guys will simply get trapped out. So do not do that. I'll be moving on to silver now, and the main important part of silver is quite volatile. If you guys are shorting or longing silver from a funded account, make sure that you guys have got the spread quite clear, because the moment you do that on a larger scale, you guys will see your losses being quite big comparatively from a normal account or from a contract based account which you guys do it from your broker. On a funded account, it's going to be quite different because every broker have their spreads different, and at the same time your losses might be quite enlarged. So if you look at silver from a weekly perspective, I do not have much plans of silver, neither from the long or neither from a short side. You guys can see it is hovering around on a tight range, which is basically from 20.60 to 23.6. And if I talk about longing or shorting or making a directional bias, I'm not gonna do anything like that until and unless I see a good reaction either from a demand or from a supply zone. I'm keeping it quite simple for you guys to understand how exactly do you guys even initiate a long. You guys can see that it took liquidity from the similar zone where it had taken liquidity. However, this liquidity was taken a little above to this. I'll just wait for these zones and I'll wait for how exactly does silver react from here. If I see a good reaction of silver from 20.6 or from 19.6, I might think about longing silver. However, that's also not gonna give me a bigger confluence until I see this zone reacting quite largely or a huge jump or an impulsive move from here. If I don't see anything here and if I just see silver moving up from here, if the CPI comes under the estimates, then I would just wait for silver until it taps the supply. Then I might tend to short silver if I get a good zone. And if I do that, I'll be sharing the same idea on the same channel. So do follow me for more updates, and at the same time I'll see you guys in the next video. I hope I've shared all the levels and I hope you guys understood what exactly can you guys do. The best thing right now is just to wait for those levels to get mitigated, or else do not initiate forceful trades. That is just gonna blow up your funded account or your own contract account. That's it for today's update, and I'll see you guys in the next video.